We'll start with introductions. With me this morning is Gobi, a SOX and internal audit specialist on our team. I am James Taylor. I serve as Sensiba's internal audit and SOX practice leader. While I've been with Sensiba for just a little over 2 years, I've been in roles focusing on SOX and internal audit for over 18 years. This has been within the manufacturing, consumer products, tech, and life science industry spaces. And in that time, I've worked in both public and also in industry. On case in point, PwC and RSM, a public portion of it. I've partnered with clients on projects centered around risk management, business process improvement, operational reviews, as well as IT-related reviews. So that's a little bit about myself. I'll turn it over to Gobi.
Good morning, everyone, and thank you for joining us today. My name is Govi Gupta, and I'm a Senior Internal Audit Associate in the IA and SOX practice. While this is my first year at Sensiba, I have several years of experience with SOX testing on management's behalf and as an external auditor. My most recent experience includes working as an internal auditor at a company where we implemented a SOX compliance program. We went through the challenges of implementing SOX, and we will touch on that in our discussion of challenges around SOX implementations later on. And now on to, we're on to the next slide, I think. Yeah. So for context, here's our agenda. In addition to implementation needs and challenges, we'll provide an introduction to Sensiba. James?
Yeah, thank you, Gobi. We're a full service accounting, consulting, and advisory firm. We're headquartered in Pleasanton, California, with a total of 6 offices in Northern California and in and around the Bay Area, and 1 up in Oregon. We serve clients across the US and have done so for over 40 years. In addition to audit and tax, our consulting group offers a wide range of services, including fractional CFO and control resources, outsourced accounting, internal audit, and technology solutions. We're also one of a handful of accounting firms that are B Corp certified. The designation shows our commitment to our environmental performance, paired with our accountability and transparency. This ensures we have maintained a balance between our purpose and profits. There's been a lot of interest in B Corp certification lately, especially amongst companies that focus on sustainability, for which we have a practice dedicated to. If that's something you're looking to navigate, we do have more information on our website, or I can connect you with one of our Sensiba's team members.
Next, an overview of our consulting practice. We offer a suite of technology solutions, which include the implementation and optimization of platforms, including Sage Intacct, Blackline, LeaseCrunch, and the other systems you can see on the slide here. We also have management teams in their search for the right systems through aligning organizational strategy and needs to provide recommendations for a best fit solution. For outsourced accounting, we provide full spectrum support from transaction level accounting to financial reporting on an ongoing basis. However, we also support our clients with cleaning their books, improving financial statement presentation and disclosures, as well as developing annual budgets and forecasts. In addition, the group provides CFO and controller services. Our internal audit and SOX team provides support to privately held and publicly traded companies. This includes full outsourcing and co-sourcing arrangements with a focus in the manufacturing, consumer products, technology, and life sciences industry spaces. This includes financial, operational, and IT-centric processes and controls. Our goal is to bring a scalable process for risk assessments, process design and documentation, control design and effectiveness evaluations, and recommendations that are right fit based on organizational needs and cost.
Thank you, Gobi. Now that we've introduced you to Sensiba and our consulting practice, I'll talk a little bit about our team and approach. The value we bring to our clients is really based on our team. We have an established team with an average of over 10 years of experience. Each have had careers focused in the risk management, internal audit, and risk SOX disciplines. What we don't bring to the table are resources that have been repurposed from other lines of service. To stay in front of regulatory changes and maintain our strengths, we challenge our team through both external and internally sourced trainings. Internal training sessions are generated by individual team members and presented to the team based on their preference and specialization. As a result of our experience in training, we're able to provide tangible value to our clients in the course of project work. And one way we can do this is through the relationships we have established with external audit servicers, both in Big 4 and Tier 2 companies. In fact, our team served at a number of the companies you see here on the right side of your screen. As a result of our experience in those relationships with audit servicers, we're able to attain a high level of reliance on our testing. And this really helps reduce the extent of testing to be performed by external audit, which ultimately ends up in being fewer hours, smaller bill. Here we keep it simple. Leveraging from experience, we approach relationships with the longer term in mind. Part of our mission is to provide continued support as companies and client teams grow and their internal control systems change and mature. Through this partnership and collaboration with client teams, from staff members on up to the C-suite, we're better enabled to understand your company and your position in your industry, to know your processes, the people involved, and the landscape of your IT systems, and to assess risks and the nature of any gaps or weaknesses that you might have.
That's right, James. Through this, we're enabled to develop and coordinate project plans that drive value and efficiency, which align with organizational needs and strategies. And of course, all of this is accomplished through communication and setting of expectations for our delivery, for management and external audit service providers. This reduces the risk of surprises throughout the project. Last point here really relates to part of how we add value. This relates to adding focus to understanding client systems, applications, and how to leverage the most from each. I would say that in practice, this is an area that is underappreciated. Application and configurable controls are very powerful. They can greatly strengthen their internal control environment and aid in reducing the level of effort required for testing. So now that we've introduced ourselves and Sensiba to you, we'll shift our focus to a discussion of SOX implementation needs and challenges.
Hey, thanks, Gobi. There are plenty of resources and presentations on the legal text and the history of SOX. I really don't want to revisit that here. What we would like to do is provide some context for what led to the creation of the Sarbanes-Oxley Act and how can SOX benefit your company. So the genesis and the need for SOX stems from a pattern of poor ethics that was demonstrated by C-suite individuals, which resulted in a number of significant accounting scandals. Those were in the news quite a bit 20-some years ago, and a few of the more notable ones, which I think most of us know, are related to Enron, WorldCom, and Tyco. Prior to SOX, most companies lacked monitoring controls, and there was little to really hold executives accountable. Using a simile, the leaders of publicly traded companies, often charged with guarding the doors to the company bank vault, had the authority to go into that vault and also had the keys to the vault. So unfortunately, a number of executives did take advantage of that position. And as a result, those scandals eroded investor confidence, certainly in that company, but more largely on markets.
So now what you see listed in the 4 bullets below here is what SOX does for companies and the market. Thematically, SOX brings a restoration of trust back to each. So what should your company realize from SOX? Well, when fully adopted, companies generally have a better understanding of financial statement risk exposures, more reliable data and documentation, greater efficiency in the financial reporting process, stronger communication across the organization, and team members who know the importance of their role and contribution to the company.
Yeah, before we talk about compliance requirements, I want to add some context here to between SOX, what SOX is, and implementation needs. And that bridge is really the level of effort required for your company to be compliant. What's required is really going to depend on the size and complexity of your organization. What I will not go through all of the data on this slide, rather. What I'd like to do is use this as a reference so that you can use to determine whether or not you're a smaller reporting company, an accelerated filer, an emerging growth company, or if you're required to be compliant based on SOX 404A or B. And what we're showing here on the far right-hand side is where 404B is triggered. Otherwise, you're going to be 404A. If you're required to be compliant with 404A, the benefit here is that management really can dictate the nature and extent of testing to conclude on the state of internal controls. Your external auditor is not going to opine on your internal controls. So as a result, the effort required and costs will be lower than that of 404B comparatively. Now, conversely, if your public float and annual revenues breach the thresholds defined here, the testing of requirements of 404B will be triggered. And at that point, the company's external audit servicer will perform an integrated audit as well. So what that means is that they will, at the end of the year, opine based on substantive testing, but also on your company's internal controls. Now, the cost and level of effort required for 404B is notably higher than and will require greater communication and coordination. Granted, the addition of the company's external auditor and their needs. Now we'll talk through at a higher level the more significant requirements for a successful first year compliance effort. And just to level set, this is not an exhaustive list. However, these components are designed to help enable a company to have a more effective and successful first year. We'll start with the SOX checklist. And as a company falls under SOX mandates, meeting regulatory shareholder expectations will require comprehensive planning, communication, and project management. Leveraging from a checklist will really help organize the effort and ensure all key steps are completed. To ensure you have all the right people involved in the effort, you should start by identifying an executive level sponsor, usually a CFO or a controller. Their role is to set the tone, help initiate the project internally, and ensure the project stays on track by managing through any project roadblocks. Your core SOX team should include process owners from key functional departments such as accounting or sales or IT at the corporate location, but also at any significant business units that are also in the scope of testing. And lastly, you will need to include your compliance team, and that can either be your internal audit team or a third-party servicer.
So with everyone in place, you should develop a communication plan to define reporting lines and how and when communication is required. For example, how issues are to be reported. In addition, the cadence should be set for reporting to the audit committee, the executive sponsor, external audit, and process owners. Next, you'll need to develop a comprehensive SOX testing plan. In this step, you will map out the year, usually in the form of a calendar, to include timelines of planning, walkthroughs, testing, and remediation. This piece will also include agreeing on a reasonable turnaround time for when document requests should be completed.
Yeah, thanks, Joey. With planning set, you'll need a control framework as a structure to organize and categorize your controls. There are a number of frameworks. There is really no requirement to use one over another. COSO framework 2013 is the most common. Regardless of which one you use, the framework will provide valuable guidance to your compliance team. Next, you're going to need to understand your company's risks. Here's where you kind of really get into rolling your sleeves up and getting to it. And it starts by analyzing your financial statements and identifying significant transactional flows and the executives responsible for them. From this assessment, you should have a formal document that shows, it's kind of a packet rather, not just a single document, but it should show what your company's level of materiality is, what your significant classes of transactions are, the level of risk determined for each of those transaction classes, the locations and processes that will be included in the scope of testing, and also a detail of your IT landscape.
Your IT landscape should include a listing of all systems and applications, including systems which are hosted or maintained by a third party. I'm stating this piece separately due to its importance. With the listing, you should determine what information is utilized in each system, how information may flow from one application to another, and how access to data is restricted and secured. As a pro tip, you should consider how well your company is leveraging from the capabilities of your systems. Lastly, you'll need to identify which of your systems and applications will be in the scope of testing. Next, you'll need to document your understanding of each class of transaction or process, consider the risks within each, and control activities in place to address each risk. When completed, you should have a set of process narratives or flowcharts and a risk and control matrix. As you develop the risk and control matrix, you should be able to see which control activities address key risks. Those are the control activities that should be considered as key and included in your testing efforts.
Now you'll need to, thanks Govi, now you'll need to determine if the control activities as written and performed actually mitigate the risks they're associated with. As management teams and control owners look more closely at their controls, there will be instances where the control will need to be changed or strengthened to better address that misstatement risk. The evaluation of control design is typically performed through a walkthrough, which is where there's going to be a session with control owners, external audit if they're there or it applies, and then also your internal auditors. And there will be a walkthrough of a sample of one. In addition to control design, the effectiveness of the control will need to be evaluated. This is to ensure controls are operating as advertised. Aside from drafting process narratives, this is going to be the most labor-intensive part of the first year process, and definitely the most labor-intensive part in subsequent years. And for each key control that you have, you're going to need to pick a sample that is representative of the population. sample size ranges will be based upon sample methodology, but then also the size of the population. And one pro tip here, you want to make sure your company's methodology has been agreed upon with your external audit servicer where that's going to apply if they're opining on management's controls. And at the completion of testing, you'll need to document and evaluate the nature of control deficiencies and then communicate those with management, of course, external audit, and include them in part of your remediation plan. Now we'll talk through some common challenges we see in practice. In fact, we've seen these in companies that have well-established SOX compliance programs. Companies often experience changes within their organization that affect people, processes, and technologies employed. As a result, a measure of vigilance is needed to ensure continued success of your SOX program. So first, not having an executive sponsor is going to create a big mess and can derail a testing effort straight away. Aside from not defining the sponsor, however, if a company's experienced significant change paired with a SOX implementation, you want to have the caution flag raised up as the sponsor may actually be spread too thin, resulting in communication gaps or lack of timing. So this is something you want to make sure is included in the planning process. Timing is important here, especially because if as your external auditor and or your internal audit team may have scheduling limitations. And if the team runs into a roadblock or speed bump, timeliness will definitely be a factor against success. Next, roles and responsibilities, they can affect every part of the implementation. First year efforts aside, one snag I've seen in practice at clients with established programs is ensuring process and control owners understand what they will need to do and have their SOX responsibilities be understood as a priority. I've also had processes that are either large or functionally require two process owners. In those cases, you really need to make sure that there's no misunderstanding of where one process owner's responsibility ends in the process and the other begins. Otherwise, you'll be left with gaps and while you're working to update process narratives and controls.
It will be management's benefit to take a risk-based approach to address financial misstatement risks. For 404A engagements where management has control over the nature and extent of testing, this is not an issue. However, for 404B efforts, the testing approach will need to be confirmed and coordinated with the external auditor. Where a company can run into trouble is when an approach is risk-based and differs from what the external auditor is allowed to do based on PCAOB or their internal guidance. The main issue here is when the external auditor is placing reliance on management testing and cannot due to the approach taken. Often, external auditors will require a random selection in lieu of risk-based approach to avoid the potential for bias in selecting samples. When your external auditor is required to perform an integrated audit, management needs to get the entirety of the testing effort confirmed, including the approach, sampling methodology, and scheduling. We've seen far too often with new and established SOX programs are surprises near the end of the year. For example, the auditor raises a flag on more serious issue or deficiency. Vigilance is required to ensure all issues are defined and agreed upon as the test year progresses. Not having the right team members at the table at the beginning is going to cause problems. It will affect communication, assumed roles and responsibilities, and the overall culture of the organization. Typically, this is more of an issue during first year efforts where teams are decentralized, not in the same building, and or during significant organizational changes such as business combinations or acquisitions. The suggestion I would have here is to have a plan for onboarding team members required to be part of the SOX effort. Roles and responsibilities issues can pop up in a number of places. Unfortunately, SOX adds to the daily work of team members that may already have very full workdays. As a result of changes in an organization and the lack of desire to pick up work, any undefined responsibilities often remain and are not performed until it's too late. When developing process documentation and risk control matrices, having a team member define in each is a great way to ensure ownership is fully understood. We see issues with stale process documentation all the time. Stale control verbiage can be a little sneaky. The thing to note here is that management's processes are fluid, subject to change at any time, especially when there are organization changes, new team members, and new applications. At minimum, process documentation should be updated twice per year and confirmed as completed and accurate by all process owners. This is where a process and control certification process is very helpful.
Thank you, Gobi. One surefire way to crash your SOX compliance program is really, let me back up. One surefire way to crash your SOX compliance plans is to have volumes of information in your deficiency listing and to assume process owners are knowledgeable and ready to execute controls to near perfection on a regular basis. Typical issues we see are process owners not understanding SOX documentation requirements, failing to retain evidence of IPE. I don't like the name, I'm not a fan, but that stands for information prepared by the entity. And this is where there's a point in time report that may be generated. And if they fail to generate that report in a timely manner, the control will simply fail. They won't have the support. Not retaining or understanding what constitutes proper evidence of review, that can also be a problem. And not understanding the nature and importance of timing. Controls can be performed with all the elements in place and still fail if performed too late. Just to give you an example, if you have a reconciliation that's supposed to be performed in August and the quarterly filing is done in November, say November 1st, if that reconciliation is performed after November 1st pristinely, it's still going to fail. And training efforts are not difficult. However, planning and making time to train are actually the biggest hurdles. Next is understanding IPE. Hands down, this is the most common issue I see in practice, both with new and well-established programs. Just depends on who's coming in and their understanding based on what they've done before. So IPE is typically something I would include in training. Clearly, if you're developing or querying a report from a system and pulling it into Excel, you need to understand what support is required. And obviously, as mentioned before, the timing of that as well, getting the report at the right time. And here's where I'm going to feel like a broken record. IT configurable controls, they are very powerful. And if you just spend a little bit of time, companies spend a little time on these and get the right ones in place, they can really save you a lot of heartache in the future. Having to resort to manual compensating controls is usually both labor intensive, and a lot of times it just doesn't cover it. The other aspect to think about this as well is if your company's already invested in systems, there's a potential that you may not be getting the biggest bang for your buck out of all of those systems. So it's a good idea to leverage off of this opportunity as you're going through SOX and risk and processes, just to see if you're really getting the most out of your systems and applications. And this one, I see this a lot in practice. Third parties, so if you use a third-party servicer such as payroll, ADP, or cloud service, you're still, whatever they're performing for you, management is going to be responsible for the controls that will affect their financial statements. Meaning they wouldn't be performing testing of that third party. However, they should have a third party audit report, which would be in the form of a SOC 1 Type 2 report. So last couple of things here, we've got confirmation of and communication of deficiencies. We really need to make sure that you root out all of the issues, discuss them with process owners, and then also you get to a point where the remediation piece is in place so that not only is it accepted and it's determined to be viable, but also that you're tracking and that those remediation actions are being resolved and performed in a timely manner.
So now that we've talked through key elements needed and challenges to implementing and maintaining a SOX compliance program, we'd like to open it up for the remainder of our time to talk through any questions you may have. We have received a couple of questions in advance, which James will start with. In the meantime, please feel free to post any questions in the chat box.
Hey, thanks, Cody. I'll just go through a couple here. The question here is, if you outsource SOX planning and testing, does that necessarily change the responsibility for the adequacy of controls and or remediation plans? And I'm assuming the question really is here, is there going to be a shared responsibility? And the reality is, no, it doesn't change anything. The controls belong solely to management. How they're tested, who they're tested by is there's some important factors to consider, but it doesn't change responsibility. So you can have a third party perform testing. However, the nature of the controls and the supports and any issues will remain fully as management's responsibility. It's a good question. The next one, what is a typical timeline to implement controls and to be SOX compliant? So that's a good first year question, and that's going to depend on a number of factors, really on the size and complexity of your organization, what policies, processes, and control documentation you already have in place, and then also how knowledgeable your team members are. So you think of it as a spectrum, a maturity scale, if you will. You need to understand where you're at. And so the further you are down that maturity scale with the training you have for your team members, and obviously the other factors I mentioned, the less time you will need to get up and running. But typically you can be 0 to SOX ready within the first fiscal year. You may have at the least a few minor deficiencies. However, you can be in a good spot at the end of your first year. Just as a side note, your first 10K will be more of a buy, meaning management isn't required to comment for that first year of IPO, specifically what is associated with that first 10K reporting. However, for the second year, the full requirements, including reporting, will be in place for 404 purposes. All right, let's see here. Got through those. Don't see any questions coming in here, and we are pretty close to the bottom of the hour, so I will give you a minute or two of your time back. I would like to say, if you have any additional questions or would like to connect, just reach out. But that will conclude our presentation. We thank you and really appreciate that you took the time to be here. Enjoy the day.